What is going on, everybody? Welcome back to episode 2 of the 2Key Mentorship. Hope everyone is doing well. And for today's video, we are actually going to be covering how to trade with supply and demand, how to actually enter and exit trades with your supply and demand zones. Now, in the episode previous, we had covered how to actually spot/draw out the supply and demand zones. So if you did not watch that video, I definitely recommend going to watch that video, because one of the biggest factors in terms of trading successfully based off of supply and demand is actually drawing out the best, most confirmed zones. So to understand that and understand how to draw the best, most confirmed zones, check out the video previously. So let's go ahead and hop right on into it, hop into the charts. Now, we're going to be doing two different examples with demand and two different examples with supply. So let's go ahead and hop into it. So let's start with a demand zone, right? How would we trade, or how would we treat a demand zone when we see price, retrace back to it? So I do see a demand right here. We see this point in price right here, where we have this low being created, then led to a strong aggressive move to the upside, right? Indicating buyers stepping in at this price point. So boom, we covered this in the last video. Let's go ahead and just draw out this demand area and then extend that all the way out. Now, there are a couple of different things that you want to look for when it comes to actually trading off of these zones. Now, number one is going to be understanding the candles, how price action is actually looking once price then reaches back into that zone. So here we can see price does its thing, we tap back into that zone, and we get a strong rejection candle, right? A strong hammer candle, obviously indicating that this demand zone was starting to be treated as a barrier and started to be treated as an area where we would expect buyers to start to step in, which is exactly what happened. So this is actually going to be the first thing we want to look for, is some type of strong rejection candle, or in this case, a hammer candle is going to be one of my favorite indications. So we can see this black candle right here, and also if we zoom in, you can see that this blue candle right here is also indicating a hammer candle, right? So boom, we have two hammer candles mixed with each other. That's one right there, one right there. Now let's go ahead and get rid of the drawings just so we can have a clean chart. Now you guys get the point, right? So if we go to when price tapped this zone for the second time, what do we see? We see multiple rejection candles, right? Multiple hammer candles. This is a strong hammer candle right here. Another strong rejection candle right here, right? So obviously, when you do see this, when you do see your supply and demand zones, another thing that you want to focus on is the momentum going in to these supply or demand zones, right? So for example, leading into this demand, we can see that it was obviously a lot more selling momentum, selling pressure being inputted. But look what exactly what happened right when we tapped into that demand. That selling pressure started to slow down. It started to reject. It started to treat this level as a barrier. And the reason for that is obviously because those buyers were starting to mix in with the selling orders. And when those buying orders overlap on the selling orders, that's when we start to get the big move to the upside. So that's going to be the first thing that you want to look for, is simply just understanding the candles, price action. And one of my favorite confirmations is looking for those hammer candles, just how we just showed. So for demand, it would be hammer candles like this, something similar. It could be different sizes, but as long as you have that hammer wick or just that rejection candle, that's a good confirmation, because it tells you, okay, we had strong selling leading into this, but where did that strong selling go once we tapped into that demand? That the strong selling started to slow down because the buying started to being inputted, right? So that's obviously another confirmation that you can use, is just understanding overall momentum. So that's going to be that. Now, another thing that you can actually look for, let me get rid of all of this, wow. Another thing that you can look for is seeing if there's another key level inside of the zone that you have. So for example, here is going to be our demand, right? Now, what we can do is we can see if there are any type of support levels, any type of fair value gap levels that are matched or mixed within this area, right? Now, we do see obviously a strong low being created right here. So we can mark out this low, so that would essentially be treated as some sort of support. Or we also have this low that was created that then led to a strong push. So obviously there is a bit of support there as well. Now, let's see, are there any fair value gaps? There is a fair value gap right here. So if you see, there's a fair value gap right here on the 1 minute. Now you see it's not like mixed within each other. The fair value gap isn't inside of the demand, but they're still fairly close. Which, what does that tell you? Bullish fair value gap, bullish demand zone. That means within this overall price range, buyers are likely to step in heavier than usual, right? Because you have different confirmations showing you. You have the bullish fair value gap, you have the demand zone that created strong buying pressure, you had these strong lows, the support levels. So you add those different confirmations, such as looking for different key levels, understanding price action and how the candles are looking. So those are things that you really want to look for. And as you can see, if we extend it out, you can see that this support level here, price didn't just reject off this demand, it also rejected off of this support. Look what happened, it rejected pretty nicely as well. You can see price failed to break under this support. And why is that? Because this support, this price area or price range was in a area on the charts that previously had strong buying. So when price then returns to that level, a similar move or a similar, concept is likely to happen, which is the move to the upside, right? So that's going to be that. So boom, you obviously have your demand mixed with the key level, and then also mixed with understanding price action, momentum, and how the overall candles are looking. So that's going to be that for demand. Let's switch over to supply and get another example there. So let's see what we have for supply. So I do see right here we have a strong high being created, which is what we want to look for when drawing out our supply zones. If it was a demand, we want to look for a strong low. But since this is supply, we're looking for a strong high being created, which is exactly right here. And we're going to go ahead and mark out this supply zone. So once we have that marked out, we're going to extend that out. Now we have our supply zone mixed with this resistance level, which is two key levels within each other, right? So we wait for price to then do its thing, retrace back into it. Now what are the things that we want to look for? One is going to be price action, right? We want to see how the candles are looking going into this demand zone. And we obviously see that the candles are starting to show selling pressure, starting to show signs of rejection, as we can see. Now, what's another thing that we want to look for? We want to look for the momentum going into that supply zone, which is obviously strong buying momentum going into this supply zone. Now, once we tapped into that supply, what do we see? We see buying momentum start to slow down, which is another confirmation, because that buying pressure, all of a sudden, after being so strong, it just stopped. It just slowed down. Why is that? Because the sellers started to step in, right? The sellers started to do their work and put in those selling orders, right? And when those selling orders, especially a lot of them, start to come in, that's what causes the moves to the downside. And that's also why we trade with supply and demand, because the supply areas are areas on the charts where we're expecting a ton of selling orders to come in, which will then lead to a move to the downside, and vice versa for demand, right? So boom. So there's that. We obviously see buying momentum start to slow down, which is one confirmation. We see our second confirmation, which is going to be the candles just overall showing signs of rejection, showing signs of selling pressure. And a third one is obviously going to be the fact that we do have pretty much two key levels mixed within each other, which is going to be this resistance, which is this black line, also going to be this supply zone, right, mixed within each other. And the fact that price is treating this level so well as a barrier, is rejecting this level so well out of nowhere after it had strong buying pressure, is another confirmation to us that, okay, the sellers are obviously starting to step in, and that's where you take a trade. Now, an important thing is going to be, what do you do for your stop loss, right? Or what do you do for your take profit? Now, that's exactly what we're going to go over right now. So for my stop loss, when I trade with supply and demand, it's typically almost the same every single time. And that's going to be either a break above supply or a break below demand. Because keep in mind, our supply and demand zones are treated as barriers. And when those barriers are broken through, it's not a barrier anymore, right? Sometimes that barrier can be replaced, and that would be considered a break in retest level, which we'll get into in the future. But for the most part, in terms of my stop losses, this is what I'm going to be doing. So if I'm obviously entering off of supply, so in this case scenario, I would be entering right around here, right? My stop loss would simply just be a close above this candlestick high that you see right here, or a close above this black line, which was that resistance level that you see right here. So what we can do is boom, mark this out. We can put our stop loss at a break above the highs. Now keep in mind, you want to see a full break above. You can see here, it slightly pushed up just a little bit, but it never gave that full break. You know what I mean? So that's what you want to look for when it comes to your stop loss, because there can be many different times where it can get close, it can wick you out, and then reject back in your favor. So that's why you want to wait for that full candle break, that full candle close above, which in this case we never got. So for the stop loss, that's literally going to be how I do it for every single trade. If it were demand and we were entering off of this demand zone, I'd literally just do this. And then obviously stop loss would be a break below those lows or a break below this demand. So that would be that. Now, now that we covered where we're putting our stop loss, where are we going to be targeting for our take profits? Now, what I do for my take profits is I'm always targeting a key level, right? When it comes to my exits, when it comes to my take profits. So what I'm going to do is, before I enter the trade, I'm going to be looking at where the nearest previous key level was. And since we're trading to the downside, we want to look for some type of buying key level, right? Because obviously once it does touch that buying key level, we want to exit at the best point possible in case it does reject there. So that's why we target those buying levels when trading with supply zones, because those are the best and lowest points that we can look to capitalize our trades before it then reverses. So in this case scenario, we see that there is like a support right here, like a strong rejection back to the upside, which we can mark out as our first take profit. So you can do that. You can see trade ends up working beautifully. And if you wanted a bigger trade, you can literally just target the next demand, which would be all the way down here, and you can still see that that trade ended up beautifully. Boom. Okay, cool. So that would be that in terms of where we're putting our stop loss, where we're putting our take profit, and also what we're looking for in terms of actually understanding when to actually enter the trades. Now, another thing that I want to cover is, obviously not all supply and demand zones are going to continuously reject and continuously bounce. That's why you typically only want to trade the first to third rejection within a supply zone. If it has 3 or 4 rejections or bounces into that certain supply or into that certain demand, it's just going to get more exhausted, and it's not going to provide you with A, the move that you're looking for, and B, it's likely to just stop you out, because since it's exhausted, since it already put all the fuel into the tank from the previous moves, it's not going to give you what you're looking for in the later bounces. So that's why it's best to trade the first to third rejections or bounces from whatever zone that you're trading at. So just to cover up in terms of take profits, for demand, we covered what we would do for our take profit with supply. Now for demand, it would literally be the same exact thing. Let's say we are entering right here. Now, since we're entering on a demand zone, we want to look for the nearest selling zone, because the selling zone is going to be the highest point before we do get that, reversal, if we do get it. So in this case, we see that there's some sort of resistance right here at this high. You see this high being created, then led to a push to the downside. So what we can do is, if you're looking for a smaller trade, you can target the nearest previous selling level, which is exactly what we did, and you can see that trade worked out beautifully. You can see that we had those rejection candles leading into this demand zone. It tapped into our support level, right, which would be right here. You can see that there's support right here, or even just another demand that's created right here, right? So the more you can mix and match those key levels, simply the more confirmation you have within your trades, right? Because the more confirmation is telling you, okay, this area, this price range is likely to be presented with the excessive buying or excessive selling that it did previously, right? And only way that it's not going to do that is A, you're not drawing the correct zones, B, you're trading on zones that are exhausted, or C, sometimes market will really just, screw you over even if you have the best zones or best setups, which is just completely normal, right? That's obviously where our risk management comes in. So that is going to be that in terms of pretty much everything that you need to know when trading off of these supply and demand zones. The biggest thing that I can just wrap it up with is, everything that I said is going to be the biggest thing. There's not really going to be one big thing. You kind of have to put all of the different pieces together, right? You got to be making sure you're drawing out the best supply and demand zones. You got to make sure that the zones that you're trading off of haven't been rejected or bounced off of so many different times, right? You need to make sure that when you are trading off of those supply and demand zones, how are other stocks looking, right? How are other like sectors moving? For example, when I'm trading SPY, I'm also looking to see how Tesla is doing at the same time, right? So for example, there are actually different times where SPY and Tesla, they obviously trade similarly, right? So if there can be a point where SPY has the same demand zone and Tesla is matched within it, meaning like SPY is about to hit demand and Tesla is about to hit demand at the same exact time, that's another great confirmation for you, right? That you want to take advantage of. So definitely look into that. Don't just look at like one stock with supply and demand zones. For example, if you're trading tech stocks, then look at other tech stocks to see how they're doing. Look to see, are they about to tap into demand? Are they about to tap into supply? Or if, for example, you see one at demand and one at supply, maybe that can be something for you to kind of step away from. You know what I mean? So it's really just understanding and kind of putting the small pieces together to really make everything happen at once and execute everything at once. So with that being said, this is going to wrap it up. We had covered the supply zones, the demand zones, the key levels to look for when matching them inside of your supply and demand zones. We covered understanding momentum, understanding the candles, understanding actually drawing the best zones, which, like I said, if you guys haven't watched the previous episode, that is a must, before you watch this. So if you guys have any other questions, definitely let me know down in the comments, or let me know in the Discord as well. I'm live there every single day, and I will see you guys in the next video, next episode, for some more value. Peace.